Welcome back. Dubai's trade exchange with European Union countries totaled 77.2 billion dirhams during H1 of 2012, up from 77 billion for the same period the previous year. The Dubai Customs' latest report shows that imports from EU countries came to 61.2 billion for the January-June period, while exports hit 3.7 billion dirhams for H1, up from 3.2 for the previous year. Eastern Europe Trade Exchange in particular saw record growth rates, such as Estonia at 369%, Bulgaria with 332%, and Lithuania at 225%. Dubai's basic imports included furniture, petroleum oils, tobacco, telecommunication machinery, sunflower seeds and wires, while its major exports to the EU countries include cigarettes, raw aluminium, plastic, printing films and ceramics. The Abu Dhabi Investment Council has signed a $1 billion agreement with Australian firm the Goodman Group to invest into logistics warehouses across Japan. ADIC and one of the largest listed property companies in Australia have established a 50-50 joint venture, the Japan Development Partnership, with a combined equity of $500 million. The Tokyo development projects will develop 3 projects in Tokyo Bay and Osaka, and the partnership plans to develop a total of 250,000 square metres of gross leasable warehouse space. According to a local paper, the Australia Gulf Council revealed that the GCC region represents one of Australia's top export markets, worth 31.66 billion dirhams in 2010. Abu Dhabi Airports Company and Rotana Jet have announced the launch of double daily services to Fujairah, Al Ain and Sharjah from Abu Dhabi International Airport. The extension to its domestic route network will see 2 flights per day for Fujairah to start on the 19th of September, double daily flights to Al Ain on the 20th of September, and flights to Sharjah are to follow. Let's now take a look at the stock indices across the GCC. It was an eventful week last week, which saw ECB President Draghi announce the undertaking of outright monetary transactions, which is the purchase of European government bonds in a bid to safeguard monetary policy in the euro area. Also on the calendar last week was the US non-farm payrolls, which came in at 96,000 new jobs, added during August, well below the expectation of 130,000. To discuss the markets further, we earlier spoke with Gaurav Kashyap, the head of the DGCX desk at Al-Pari Middle East.
It was a largely eventful week in the financial markets last week, and we can expect more of the volatility and shifts in risk sentiment to drive market pricing in this coming week ahead. There are three key pieces of data that we'll be watching out for. On Thursday, the FOMC concludes its two-day meetings where they're largely expected to announce QE3 or additional easing measures for the US economy. Remember, this past Friday we had a very, very poor US jobs report coming in below 100,000, and this sparked speculation and fueled the rumors that this Thursday's FOMC meeting would be the perfect forum for Ben Bernanke to announce these easing measures for the US economy. Now remember, we had to see poor jobs growth for Ben Bernanke to be forced to act, and this Friday's data has perhaps given him the opportunity to do so, although he has been very against announcing such measures. We may see a combination of purchases of mortgage-backed securities as well as US Treasuries, a combination of purchasing of both. Of course, the Operation Twist program will continue to 2012, but overall we expect Ben Bernanke to underwhelm the markets with regards to, we're not expecting to see too large a purchasing package being announced on Thursday. Also, we'll be watching out on Wednesday the Dutch elections as well as a German court ruling which could throw Germany's participation in the ESM into further doubt. Once again, these are going to be two very, very high-risk events for the euro currencies, and we can expect to see a lot of market volatility as a result of these three announcements.